Hey guys, come on in. Hey guys, you made it to the last topic. Reserves. So we've talked about income. We've talked about income, debt, credit, down payment, closing costs, and reserves. And you say, Mark, why is reserves even important? What does that mean? Reserves are the extra money you have from what you make and what your debt is that you've socked away. It could be a 401k plan. It could be a traditional IRA, a Roth IRA, investment account, like say an E-Trade, Charles Schwab, TD Ameritrade, your checking account, your savings account, any kind of, savings, your liquid assets that if you needed it in an emergency, you can tap into. I'm just talking, again, just from personal experience. There are a lot of lenders that have qualified people out there that have very, very little reserves. I don't know how you feel, but I don't feel safe and secure if I went through this whole process of qualifying for a home and I even maybe saved an extra couple $1,000s, but I need to now furnish that house. So say I had $5,000 at the end of the day, but I need $4,000 or $5,000 to furnish this house. That leaves me with nothing in my bank account, nothing in my savings account, and it doesn't prepare me for an emergency in my life. Just from experience, from things that I've gone through, I tell you guys this story where I got laid off in 2014 after 15 plus years in a corporation. And thank God for my situation, I had a severance package and all that kind of stuff. But for most people, you're probably going to experience tough times in your life. You're going to go through being either fired, hopefully not, because of something not moral or unethical that you did. But layoffs could happen. They called me into an HR office and said, unfortunately, your position's going to be eliminated. And, sorry, that's what's going to happen. And all of a sudden your health insurance is going to go away and all these things happen in life. So I was a big fan of Susie Orman, still am, David Ramsey. You typically want to have at least 6 to 8 months worth of reserves for many factors. Like I said, medical things happen. As you get older, things are going to happen. You might need surgery. You might get sick. Prescription drugs costs go up, all these type of things. And you need that 6 to 8 months of reserve. Again, it doesn't necessarily you could have $2,500 in your savings and you could have $100,000 in your 401k and another $20,000 in an investment account. It doesn't necessarily mean it has to be in your checking your savings account, but you should have enough to live off of in a situation where you got laid off or let go and you've got a $2,000 a month rent or $2,000 a month mortgage. That doesn't stop. You have a $250 car note. That doesn't stop. Your medical bills are coming in. That doesn't stop. It's going to affect your credit if you don't pay for it. So have enough for your combined debt, mortgage or rent. We're talking about home ownership, so mortgage in this case. So you could stay in your home because you do not want to file bankruptcy. You do not want to go into foreclosure because it is death. It's almost a death knell to your credit score, your credit ability. Doesn't mean you'll never be able to buy a house again. There's obviously some forgiveness, but in bankruptcy, it stays on your credit report for 10 years. It's the worst thing you could possibly do unless you have just exhausted all options. But the last thing you really should be thinking about is being a homeowner. You're just trying to keep a roof over your head, have a car to get you to and from work to continue that income and pay off your debts and stuff like that. Foreclosure or short sale is going to stay on your credit report for 7 years. Again, it happens, but the whole message of this is for reserves is so that that doesn't happen. So look at your scenario and say, do I have 6 to 8 months? If something happened to me that I can pay my bills. If I got laid off and I got a job a month later, great. If I got it 3 months later, great. Oh, great, crap, it's turning into 5 or 6 months. Okay, you know what I'm saying? You need to make sure that at least you have that 6 to 8 months of reserves. Not only that, but now you're a homeowner. you know, typical new homes, you're going to have about 2 years of coverage for your heating and air, plumbing, electrical, usually 10 years for your roof and structure. So you're giving a little bit of security for new homes. But not everybody can afford a new home and are going to get the deal. And even if you turn into a new home and you're in year 3 or 4, plumbing, toilet's not working properly, a leak's coming through the ceiling, your hot water heater goes, it's 95 degrees in the middle of summer and your air conditioning is not working, got to pay somebody to come out. You're going to have to pay for that Freon. Oh, a coil went in it. That's $500. The whole unit needs to be replaced. It's thousands of dollars, right? So you're going to need to be in a position to not only buy that house, but maintain it, right? Somebody's got to cut the yard, or you're going to have to buy that lawnmower to cut the lawn yourself. You're going to want to plant. You're going to want to do the things to the house. You're going to want to paint it after a couple of years. Trends happen. I know one of my things is I love to go into a Home Goods or a Target or a Marshall's or a Pier 1. Guess what? You're going to want to get something, a mirror, a couch, a new bed, something for your house. So you want to have, as you're a homeowner, you're not maximizing all your budget just on your house being what's called house poor. You want to be able to still take that vacation with you and your spouse, you and a friend, you and your child. So being secure with that house, because that house is now going to become a piggy bank for you. And this is not to scare you. This is to make sure everything is lined up. Because every time you make that mortgage payment, you are getting that principal down, the amount that you owe between what you took the mortgage loan out for, say it was a $300,000 house, and you've paid down your principal down to $225,000, you have $75,000 that you have net worth available to you. So if you decide, I want to turn this into a rental property and charge somebody and make money off of them, and they're going to also pay down my mortgage, that's a benefit. I have been in this house for 5 years and my family's grown. I have $75,000, so minus my commissions, and depending on if I give the buyer any portion of their closing costs, I might walk away with $50,000, $60,000. That's big money. That might be used to buy the next house. That could be $30,000 of it could pay off all your student loans. That's the benefit of home ownership. If you're renting, you do not have that capability as far as the property. You might be able to invest in other things, but the generational wealth, the net worth that you're going to be able to have is what home ownership is all about. And that is only possible if you can pay your house note, your mortgage note. That's only possible if life situations happen to you, medical, financial aid, whatever the case may be, things happen and you need to tap into that, right? So have that 6 to 8 month worth of reserves. Think about not only purchasing the house, but furnishing the house. Think about the long-term success that you're going to have when you stay in that house. You don't go into foreclosure. You don't have bankruptcy. Think about all the possibilities as your life continues to grow, and the next house that you can buy, the next house that you could turn into an investment property, the next house I can buy just strictly as an investment property. That's how you have to think about real estate. That's how you have to continue to build up the reserves to allow you to now pass on to the next generation. Because we're all going to leave this earth someday, and we want to have something to pass on to the next generation to continue to build up that reserve fund. So that's the reserve fund. That's what I like to call a rainy day fund. I've gone through it in life. I've experienced everything from the positives and negatives, and there's nothing more secure than having money in the bank, money in investments, money in your home. So that is the 6 steps that you're going to need to purchase a home, sell a home someday, and make those types of profits. And stay in your home and pass on generational wealth. So hopefully you guys found these topics really helpful to you, and you can look back on it and be inspired to give us a call, shoot us a DM to start the process.